Good afternoon, everyone, and welcome to PSE Stock Market 101 webinar. Our goal this afternoon is to answer just three things. First, what are stocks? Number two, how to invest? And number three, why should you consider investing in the stock market? I hope you're ready. Let's get started. Now, what are stocks? Stocks are just shares of ownership in a company. To simplify things, think of companies as this huge pizza. Pizzas, they have slices. Think of one slice as equal to one stock, and that represents your share of the company. Now, of course, in real life, companies are so huge. The pizza is so big with so many slices. Our own company, for example, the Philippine Stock Exchange Inc., has more than 80 million slices. And the stock market allows you to own 10, 20, 30, or 100 slices of that huge company. Now, if you own stocks or you own shares, you get to be called a stockholder or shareholder of that company. Now, you might ask, how did the stocks reach the stock market? When a company thinks of expanding its business, it would need huge amount of capital. Now, for those companies who would like to raise capital, they have two options. One is to take out a loan from the bank. But the thing with debt is that you have to pay a certain amount of interest and you have to give back the principal by the end of a certain period. Now, for those who do not want to take out a loan, there is a non-debt option. That is to open up the ownership of their business. Instead of being, say, 100% owned by the family or their very close friends, they could open up their business, sell 10, 20, or 30% of their company, sell their shares to investors. In return, they would have the investors' money or investors' investments. And now they could use that money as their capital in order to expand, realize their expansion plans. That activity is what we call an initial public offering or IPO. Now, during the IPO, the company is selling its shares to the public for the very, very first time. It occurs in what we call the primary market because the investors are buying the shares straight from the company. Now, IPOs usually last 1 week or 5 trading days. If it gets extended, 10 trading days or 2 weeks. Now, if you, the investor, would like to avail of those shares being sold as IPO shares, you have to buy during the IPO period. If you miss to buy the shares during the IPO period, your only option is to wait for its listing at the stock exchange. Now, your stock market is what we call the secondary market, where investors buy from or sell shares to each other. To know more about those companies who will be conducting their IPO, you could go visit the PSE Edge. It's our online disclosure system. And you could also watch out for the guidelines posted by those companies who will be conducting their IPOs. So in the PSE, we have 268 companies whose stocks or shares are listed and traded. 268 companies, that's quite a lot. That's why we would need to have a measure or a barometer in order to represent the overall performance of all of these 268 companies. That's what an index is for. An index is an indicator of the overall performance of the stock market. Now in the PSE, we have what we call the PSE Eye. This is the main index of the Philippine Stock Exchange. It is composed of your 30 biggest and most traded companies in the stock market. For those of you who are reading newspapers, these are the same companies which are tagged as blue chips. Probably at least 5 or 10 of these companies you're very, very familiar with, or you even patronize their products or services. Let's go through the list very quickly. You have your Aboitiz companies, Ayala companies, you have your BDO, Globe, Jollibee, Meralco, Pure Gold, San Miguel, URC, and many others. You could find the complete list of the PSE Eye companies on our website. That's pse.com.ph. Now, for those of you who are curious, how do you compute the index? It's very easy, actually. An index any index starts with a base value. A base value is an arbitrary value. It could be anything. It could be 1, 10, 100, or 1,000, anything. So for us, we chose 1,000 as our base value. Now, using the total value of all the 30 blue chip companies, if the total value of their shares increased by, say, 2% on day one, you just add 2% to your base value. Your index level is now 1,020. If on the following day, the total value of those shares decreased by 0.5%, you just deduct 0.5% from your previous day's index value. That's from 1,020. You now have your day to index level. That's 1,014.90. Now, we did that since the 90s up to today. That's why we have our 7,000 plus index level. So hopefully, when you see the PSE Eye level on newspapers or on television, it would make more sense to you now. Okay, so that's how the index is computed. Now, over time, you'll start to see a trend in your index or in your PSE Eye. If generally the trend of your PSE Eye is going up, we say that the market is a bullish market or a bull market. On the other hand, if the general trend is going down or decreasing, we say that the market is a bear market or a bearish market. All right. Now, we know that investors are also looking for diversity in their portfolio. That's why some investors are looking into mutual funds or UITFs. Now, mutual funds and UITFs are not available at the Philippine Stock Exchange. They're not listed. They're not traded here at the PSE. But we have something that's very similar to that, and we call that your ETF or exchange traded fund. ETF is actually not difficult to understand. It is just a hybrid of the usual mutual fund or UITF that you know, plus we've added to that the features of a stock. Now, what do we know about mutual funds and UITFs? They have this pool of money. They invest that into underlying shares. Okay, but the thing with mutual fund and UITF, one of the salient features is that you have to hold it for a certain period. There's a holding period, say 2, 3, 5 years. If you withdraw before the end of that holding period, you get to be slapped by a fee. Okay? What do we know so far about stocks? Stocks, you could buy and sell them anytime as long as the stock market is open. When could you buy and sell it? At will, kung kailan mo gusto. Okay? So stocks are available at the stock market anytime. There is no fee or there is no penalty when you decide to sell your shares. Okay, so those are the features that we've combined. Now we have your ETF or exchange traded fund. ETF, as I mentioned, is just like your mutual fund or UITF in the sense that there are underlying shares. Okay, there's an underlying asset. But for ETF companies, it has to be very, very specific. Their underlying shares must be members of an index that they have chosen to follow or they have chosen to mirror. So what index do we know so far? We have PSE Eye. So for example, the ETF company chose the PSE Eye as its benchmark index. It means that the ETF company is only allowed to have as its underlying shares or underlying assets those stocks or shares who are members of the PSE Eye, meaning your 30 blue chip companies. Okay, so think of those 30 blue chip companies as represented by 30 different kinds of fruits. So say you have your Ayala, your oranges, your apple, your Jollibee, bananas, SM, and so on. 30 different kinds of fruits. What did the ETF company do? Repackage that into smaller baskets such that one basket is equal to one ETF share. Okay, I hope you're able to follow. So that means if I buy one basket, I'm not just buying into Jollibee, Meralco, Pure Gold, or SM. I'm buying into the entire thing, the entire basket of blue chip companies. So what does it give you? It actually gives you instant diversification because you're exposed to the performance of not just a single company, but to the performance of all the companies within the index. Okay, so now I think you are ready to invest. Let's recap your options. You have the bigger pool, 268 listed companies, 268 businesses for you to choose from. The narrower pool is your 30 blue chip companies, pre-selected by the PSE based on its criteria. These are your biggest and most traded companies in the stock market. These are your blue chip companies. And if you want to buy the entire blue chip companies, you have your ETF. Okay, so again, bigger pool, 268 companies, blue chips, you have your 30 blue chip companies, and the entire basket of blue chip companies, you have your ETF. Okay, so this is the view of our trading floor here at BGC. If you're watching ANC, for example, you might see this. They give stock market updates almost every hour. They have a recap at night as well. Okay, so the thing that you see on the trading floor, the one in the center, the one at the center, that's our electronic display board. Okay, so surrounding that is your ticker tape or your ticker board. The information that's contained on the ticker board, these are the same information that you would find in business sections of newspapers, usually page 2 will help you understand that. So first column, that's your symbol or code of the listed company. After that, you'll see the prices, your bid and asking price, and then your LTP or last traded price. Okay, after that, you have your volume, and after that, you have your value. Okay, so again, symbol or code, these symbols or codes, these are just short names of the companies, like your Jollibee shortened to JFC, Meralco is MER, Pure Gold is P Gold, etc. Okay, bid, that's the highest buying price for that particular stock. Okay, the highest buying price for that particular stock. Ask, that's the lowest selling price for that particular stock. Okay, so what we display are the best bid and best asking prices for each stock. Now, when buyers and sellers agree at one price, a transaction, a trade, or a deal happens. Now, the price of that recently concluded transaction is what we call the LTP or last traded price. It's also called the current market value or simply the market value of that particular stock. Okay, so after the prices, you have the volume. These are just the number of shares, unit, or quantity. And if you multiply your price and your volume, you get the value or the peso amount of your transaction. So if you're buying your first stock, you would need to indicate the stock symbol, indicate your bid, your buying price if you're buying, the number of shares, your volume, and then the initial value of your transaction or the peso amount of your transaction would be your value. And then you add to that the fees and costs which will be charged to you by your stockbroker, which are very minimal. Okay, let's get to the earning part of this thing. How can I earn from the stock market? Just two ways. One is through dividends. Dividends are the company's way to share its earnings to its stockholders or shareholders. For example, Jollibee, if Jollibee did well the previous year, it might decide to give out cash dividend to its stockholders. Now, for those of you who are interested to avail of dividends, you might want to download the PSE Edge. That's again PSE's online disclosure system. There's a specific section there for dividend declarations. For dividend declarations, you should watch out for the X date, EX date. That's sort of your deadline. You should be able to buy the shares before the X date in order to avail of the dividends. Okay, buy the shares before the X date, not on X date. Because if you buy the shares on X date, yes, you own the shares, but those shares are no longer entitled to dividends. Okay, second way to earn through the stock market is through price appreciation. Ito na yung when you're able to buy low and sell high. For example, you bought the stock at 100 pesos, you saw it appreciate or increase in price to, let's say, 105 or 110. If you're happy with the price increase, you could sell your shares in order to realize your gains. Okay, so just two ways to earn through the stock market. Again, one is through dividends, and number two is through price appreciation. Okay, now how do you actually start investing? It's very easy. Number one, just need to open an account with a PSE accredited stockbroker. That's very important. You should only deal with PSE accredited stockbrokers. Number two, once you have your trading account, just fund your account and then you could start buying or selling. So at the PSE, we have 132 PSE accredited stockbrokers. 26 of them are online and the rest are what we call traditional or non-online brokers. We're lucky to have with us one of the PSE accredited online stock brokerage firms. The second part of this presentation would be by COL Financial. Okay, so how would you know if the broker is PSE accredited? Very easy to check. Just go visit the PSE website. On the left-hand side of our website, just click Trading Participants. You click on that, it will give you the full list of the PSE accredited stockbrokers. We have a special tab for the online brokers. Let's go through the list very quickly. These are our online brokers: AB Capital Securities, MyTrade by Abacus Securities, AP Securities, BA Sec, BDO Nomura, BPI Trade, Coherco Trade, COL Financial, iTrade, 2Trade Asia, First Metro Sec, HDI Securities, Investors Online, Jaka Securities, Lucky Sec, Make Trade, MSI Trade, Optimum Online, Phil Stocks, RCBC Easy Trade, Regina Cap, Timson Trade, UCPB Securities, UTrade, VC Trade, and Wealth Securities. So these are our online stockbrokers. If you want the full list, there's the other tab for the full directory of all the PSE accredited brokers. All right, so we're on the last part of my presentation. Why should you consider investing in the stock market? One, the obvious reason is for wealth generation. This is a way for you to earn passive income versus, say, for example, putting all of your extra cash in a bank. Say, bank's interest rate, very generous. 1%, I think, is quite generous. Say you have 100 pesos, you want to put it in a bank, come back to it after a year, it would just give you 1 peso less the tax at 20 centavos that the government will surely get. You'd only be left with 80 centavos. And I don't think a lot of people realize that when we put our money in the bank, they're actually using that to invest. They're investing using our money. Okay. Meanwhile, they're just giving us meager interest of, say, 1% or even less than 1%. Second reason to invest in the stock market, some people are attracted to the liquidity feature of the stock market. It's relatively easy to buy if you want to buy or sell your shares if you want to exit the market, or if you don't want to invest in that company anymore. Okay, so it's relatively easy to buy or sell as long as we're open, and we're open from 9 in the morning until 3:30 in the afternoon. We could start accepting your orders 9 in the morning. Market officially opens at 9:30. There's continuous trading from 9:30 until 3:30 in the afternoon. If your orders, for example, came in beyond 3:30, it will get through the online platform of your stockbroker, and it will be sent to the trading system of the PSE the following trading day. Okay? And third reason is this is actually a chance for you to own big businesses versus setting up your own business. And there are a lot of options available for you. There are 268 businesses for you to consider investing in. Okay, so just to recap your options, you have 268 listed companies. You could even diversify across different sectors. If you don't like the business anymore, you could sell the shares easily and just buy another business. Okay, so 268 companies. Again, we have also your pre-selected 30 blue chip companies. And if you want the entire blue chip companies, you could go ahead and buy your ETF. And with that, hopefully you'll be able to start your investing journey, everyone. Thank you very much, and please do enjoy the rest of the learning sessions.
Thank you very much. Thank you very much, Ms. Sarah. And now to continue with building wealth through stock market investing, let's all welcome from COL Financial Group Incorporated, Ms. Joyce Chan.
Hi, good afternoon, everyone. I'm happy to be here now so that I can talk to you about how are you now going to invest in the stock market. So first, I would like to introduce to you my company, which is COL Financial. So COL Financial, you may have known us before with a different name. We're called Citysec Online before. And then in 2012, we changed it to COL Financial. Now, as Miss Sarah mentioned a while ago, there's 100 plus stockbrokers here in the Philippines for you to choose from. Now, what really makes COL Financial different is that we really believe in three things. And these three things are, we believe in convenience. So we're an online stockbroker so that any device that you have that has an internet access, you can already log in, you can already invest, and you can also monitor your investments as well. Then the second thing that we believe in is education. So we're happy to partner with PSE through this webinar so that we can reach more and actually teach people more about investing in the stock market. We want to make sure that we not only give you the platform, but we also give you the resource and the education for you to use that online platform. And lastly, we believe in affordability. So when we say affordability, our company has the lowest fees that the industry will allow us to go. So our fees are 0.25% or 20 pesos, whichever is higher. So that is just for to buy, and then there is no other fee except when you sell at the end. Yes, so those are the things that we believe in, and I think those are the things that also makes us different from other stock brokerage firms. Now, here in COL Financial, we do recommend that these are some of the guidelines for you before you invest in the stock market. Now, these guidelines would be that you invest in the stock market for the long term, invest into quality businesses at reasonable prices, invest using diversification, and invest by using a plan. So I will talk about each of these guidelines in more detail. First is to invest in the long term. So this is the PSE index from 1998 all the way to 2017. And as you can see, it's not just one line, or it's not just a linear movement. There's ups and downs to this. So here, and as you can see, is that companies would also need time to grow, and therefore investing in the long term lowers your risk as well. I remember in 2010, there's a company called Ayala Land. Ayala Land was doing about 9 pesos per share in 2010. And now in 2018, it's currently doing about 37 pesos per share. That did not happen in just 1 year. That took them 8 years to build. Okay? So investing in the long term is actually good for you as a strategy for investing in the mutual fund. Okay, so also in the long term, it allows you to overcome downtrends like these that you see here in the slide. So if you're investing in the long term, the perception now is that instead of getting frightened when markets go down, you can treat it like the market is on sale. So you don't get frightened when your favorite shop goes on sale. Think of it as companies are now at a discounted price. They're now cheaper to buy, and actually it's good to buy them because your perception is that you're in this for the long term. Now, the second guideline would be looking for quality businesses. And how do you know it's a quality business? There are 5 criteria for you to check whether a company is good. So the 5 criteria, we put them in this acronym called GEMS, GEMSS. So G would stand for it's a growing company. E would stand for that it's earning. M for management credibility. S for superior products and services. And S for a strong balance sheet. So why don't we take one of the listed companies in the PSE and go through these 5 criteria to see whether it's a good quality company. So for example, let's take Jollibee for instance. So if you would want to invest in Jollibee, now this is now the checklist for you to see whether it's a good quality company. You're going to check or ask yourself, is it a growing company? Is it earning? Does its management is it managed well, basically? And do they have superior products and service and a strong balance sheet? Now, I do remember that my boss telling me something about Jollibee that really made me remember this one, especially on the superior products and services criteria. My boss once told me that in between meetings, he had a short time to eat lunch. So he went to the nearest Jollibee to grab his lunch. And then when he went there, lo and behold, during lunchtime, lines were pretty long. And he didn't want to wait. But then, right in front of him was a mother and a child. The mother also wanted to leave, but the child will not. Right? So this got his curiosity because the child wanted chicken joy. And that's all he wanted. So the mother could not leave. So my boss said, and he got curious, is that how long will this child wait for that chicken joy? So he timed it, and the mother and the child got up to the cashier after 20 minutes of falling in line and ordered their chicken joy. And once they ordered, the cashier even asked them a question. And I believe you may know that question because you may have also experienced it yourself. The cashier asked them, "Are you willing to wait?" So the mother looked at the child and the child said yes. And overall, the child waited for 25 minutes for that chicken joy. And then my boss said, no, that's a superior product because people are willing to wait for it. And even those who are the most impatient would wait for this product. So you can also use other companies and go through this criteria as well. You can get Meralco, you can get Ayala, you can get SM companies and go through the 5 criterias. Now, if the company that you choose do not have all 5, as long as they have the 4, then it's pretty okay already. Okay, so it's also nice to find a company that has a very good story that stands out. Just like my boss told me that story about Jollibee. Now, the second part, aside from looking for quality businesses, you have to look for it in a reasonable price. So what do we mean when we say reasonable price? Now, every analyst or stock brokerage firms or even in other financial institutions, they would study these companies and come out with what they call a fair value. Fair value, treat it like a suggested retail price. So for example, like a bottle of Coke, as the commercial says, the suggested retail price is 8 pesos per bottle. So now that you know that it's 8 pesos per bottle, if you go to your nearest sari-sari store and they're selling it to you at 10 pesos per bottle, you know it's expensive. But if you go to the grocery store and they're selling it to you at 7 pesos per bottle, then you know it's cheap. The only way you know it is because you know the suggested retail price or the fair value. So if you're looking at a company, look at the fair value of that company to know whether it's cheap or expensive. Now, sometimes I do have clients who would give me a call and ask me, like, what's a good company to buy? And I tell them, I have this company, it's called Ayala Corporation. It's earning, it's growing, it's managed well. And then the next question they usually ask me is, how much is it per share? So I tell them it's 950 pesos per share. Usual reaction is, the reaction is, ang mahal naman yan. They always think it's expensive. But then I tell them, if the fair value of Ayala Corp is 1,200, is 950 expensive or cheap? It's actually on the cheaper side. But if the fair value is at 800, then 950 is actually expensive. You have to compare it with the fair values. Now, the client that asked me a while ago about what stock is good to buy, the usual question they ask me is, don't you have any stock that is at 50 cents? And I tell them, yes, there are stocks that are 50 cents. It's just that, what if I told you that 5 years ago, they were also at 50 cents per share? So the price per share is not an indicative whether it's cheap or expensive. You have to compare it to its fair value. Now at COL Financial, on our research page, you can actually find the fair values of companies that we do study. So here is an example of that. So for example, here, let's take a look at Metrobank. Metrobank has a fair value of 110 pesos per share. Okay, so that will be the column that says COLFV. Now the current price of this one is at 85.50. So at 85.50, it's actually on the cheaper side. So that's why we do have a recommended rating of a buy for this one. So in COL Financial, this investment guide is actually free for all our customers. Now, once you know now whether a stock is cheap or expensive, now the next guideline is actually to manage your risk through diversification. Miss Sarah Padilla also mentioned this a while ago, is that as you know, the saying is don't put all your eggs in one basket. So that means don't put all your money in one stock. What you can do is that you can choose different stocks to invest in, and then you can also choose different sectors to where to invest in as well. So don't go buying BDO, BPI, Metrobank, East West, Security Bank, because they're all in one sector. What you'd like to do is take different sectors and get a really good stock from each of those sectors. Now, another way to also diversify is through the exchange traded fund and also through mutual funds as well. But let me talk about that in a bit. Okay? And then I will now go to the next guideline, the fourth guideline, which is you buy a stock using a plan. So what do we mean when you say plan? You have to have a strategy. So this is not just closing your eyes and picking your lottery number. You actually have to go through a strategy for this one. If the one I mentioned a while ago, that if you want to use the fair values to buy cheaply valued stocks, then that will be under the value and growth investing. And then to learn more about that, you can actually attend our fundamental analysis seminar. And because here we will talk to you about how fair values are calculated, as well as you can also see like what part of the company should you study to know whether it's a good and growing company. The other trading strategy is called trend timing or technical analysis. So here, trend timing is all about looking at the price movement of that stock and determining whether it's an uptrend, downtrend, or a sideways trend. So you look at the price movement as well as the volume. Now, should you want to learn more about this, I welcome you to register for our technical seminar. And then here in technical seminar, you get to learn more about this trading strategy. Now, the last trading strategy that you see on your slide is called the Pesocost averaging strategy. Now, in COL Financial, we call that the Easy Investment Program. So what do we mean when you say Pesocost averaging? So this is a gradual buy and hold strategy. For me, this strategy is really for those who believe that the turtle wins the race. So what do we mean by that? So with Pesocost averaging, you need to know or you need to determine 4 things. And we put that in an acronym called FROG, F-R-O-G. You have to know the fixed amount of money that you like to invest. At what regular intervals will you invest it at? For how long will you do it? And what good quality stocks are you choosing for this one? So for example, let's say you will have dedicated 5,000 pesos that you will invest on a regular monthly interval. You will do this for 3 years. And then you're going to invest it in a good quality stock. So what will happen here is that when markets are down, when markets are up, all you have to do is keep on buying it based on your fixed amount and in your regular interval. The longer that you do this, the longer that it will be better for you as well. So usually the question is, how long is long? For Pesocost averaging, I do recommend that you do this until you need the money, until you need to buy that house, to buy that car, or to pay for that tuition fee. So the longer, the better. Okay, so it's simple and easy to do. You don't need to time the market. And at the same time, it really lowers your risk. Because here, no matter what the market is, all you have to do is buy. So for example, This is the price of Ayala Land from 2013 all the way to 2014. So as you can see, Ayala Land does not move in one linear pattern. It goes up and down like this, like a roller coaster. So here, the peso cost averaging tells you that whenever it is your monthly schedule or your interval, you have to buy in your fixed budget. Let's say that 5,000 pesos. So what you do is that here, let's say in May 2013, you buy. When the stock market goes down, you keep on buying it. When it goes up, you still keep on buying it. And what will happen in the end is that you have accumulated a huge number of shares, and then the average price of those shares is at an average cost, so it's relatively low. The difference between your average cost and the current price, that's your profit. Okay. Now, I told you a while ago that I'd like to talk to you more about mutual funds. So here in COL Financial, we also offer mutual funds. So should you want to do the peso cost averaging, should you want to diversify, Metro Funds is also a good way for you to do that. So with mutual funds, what happens is that fund managers or investment houses, they pull the investors' money together so that they can buy you different investments that is or becomes more affordable. So basically an example that I have for this one is that usually during Christmas time, when you go to the grocery store, you will notice that there's a lot of gift baskets. Think of mutual funds as that gift basket, that it's already pre-packed for you, it's already chosen by experts for you, and all you have to do is buy that basket. It's easy and it's convenient. It's also diversified as well. So we do encourage for you to take a look at a certain kind of mutual fund called an equity index fund. So an equity index fund is very similar to an exchange traded fund in which it is invested in the PSE index. So that will be the 30 companies that is the barometer of the Philippine corporate performance, or the 268 companies that are listed in the PSE. So here I'm flashing to you again the 30 companies that is inside the index. So if you buy a mutual fund that's equity index or an ETF, you're actually buying all 30 companies. So you're already diversified, and at the same time, if the index goes up, your investment also goes up as well. It mirrors the performance of the index. This also makes it affordable and easy for everyone. Like an equity index mutual fund, to buy it, you just need 5,000 pesos. Additional shares of it is just 1,000 pesos. So it's really affordable for everyone. Now in COL Financial, the benefits of investing in mutual funds is that it now is a one-stop shop. So we partnered with 6 different fund houses, the biggest in the Philippines. So we have here BPI Asset Management, you have ATR, Atram, you have PhilAm, you have First Metro, Phil Equity, and Sun Life mutual funds that is readily available for you in a COL account. There's also no front-end fee or back-end fees because they took that out for all COL clients. You also have expert opinion, wherein the investment inside the basket is already chosen for you by the professional fund managers. And lastly, this makes it transparent for you to know where your money is going, and at the same time, you can track this 24/7. Now, if you want to invest in the stock markets or through mutual funds, now the first step is to choose your broker and open an account with them. So should you choose COL Financial, these are the 3 steps to open an account. First is you can download our application forms at our website. Our website is www.colfinancial.com. Now you can also type this in your search engine, just type in COL Financial. Once you find our website, you can download our application form. So fill it out. Then the second step is to submit that to our offices with one valid government issued ID. Right. The government issued ID should have a clear picture and signature. And then once we have received that, we will go through it to make sure everything is complete. Then we will give you a 8-digit COL account number for you to use to fund. You need to fund for a minimum of 5,000 pesos to open this account, but there is no fee to open an account. That funding will be there for you to now invest in stock markets, ETFs, or mutual funds. You can fund through our partnered banks, and here are some of our partnered banks. We have ties up with BDO, BPI, Metrobank, and you do this through a bills payment method. Sort of like how you pay your Meralco bill, your Globe, or your Smart bill, is that you don't need the bank account number. You just need your 8-digit COL account number as your reference or subscriber number. You can do this over the counter or you can do this online. It's easy as that. Okay. And that ends my presentation for COL Financial. Should you have any inquiries, check out our website. You can also email us at helpdesk@colfinancial.com or call us at 6515888.